Mike Santoli with us on set, taking a look at tech. Tries to rebound after suffering its third negative week. First time we've seen that since Brexit. Not so convincing today. Not so convincing, slightly outperforming, at least in the very early going, but not by much. I actually thought it made sense to look at several different slices of tech since September 20th. That's when the S&P 500 hit its high. So the S&P is down about 6.2% or so since that high. And here are a few different parts of tech. So the traditional tech sector, XLK, is actually down, what is that, about 5.6%. So it is actually slightly outperformed, or basically performed in line with the overall market. But look at the equal-weighted version of that sector. That's a Ridex equal-weighted tech fund. It's down a good deal more than the S&P 500. Actually down about 10% from its high, but about 8.8% since that September 20th level. So you've had this unusual situation, at least lately, where tech has been leading this little corrective phase we've had in the market. And that's why I do think that people are looking for a bounce there. It's a little more prime for it. Communication services, that's the news sector, of course, with all the media-like tech companies as well as old media. That has outperformed. It actually had a bad start in the spring when this ETF listed, but it has outperformed the market since then. It's been a little steadier. Facebook obviously had taken its pain before this little correction in the broad market. So finally, semis. Intel gets an upgrade today. Intel stock responding. The broader sector, not so much, about flat, and that's down 11% since September 20th, 16% from its high. So it seems as if the kind of engine of so much of the upside we had earlier in the year, it's been sputtering, is not yet kicked in again.
We were talking to Jim earlier. I mean, Micron's trading at 3.5 times earnings now.
Exactly. It's one of the sectors that is, at least if you're listening to the market, is saying, okay, that was your cycle, right? I mean, and who knows if it's wrong, but at least that's the way they're pricing these things.
Are we going to look back and look at that sector creation as a peak of some sort?
I mean, I resisted the idea at the time, but I do think it was reflective of the fact that there was this problem and the market was choking on too much technology. They had to put it in different places.
I mean, I wonder if Netflix stock tells you anything. It had the great earnings. I mean, totally blew out estimates on subscribers, which was an important answer after last quarter's miss. And the stock is down for the month so far, 13.25%.
And 20% off its high. Yeah, absolutely. And I do think it might be signaling something, at least in terms of how much good news was front-loaded into these stocks, which I think is raising the stakes for the other big tech earnings this week. Not so much because of what they're going to say, but just see how the market reacts to them. Is the market looking for an excuse to have this group bounce, or are they just going to kind of sell the good news and look to something worse?
Netflix is that's a little scary. I mean, that was a really strong quarter, and now it is below the stock,
and as
below
you know,
the price at which it was prior
Netflix is also a balance sheet story. The other ones are really not. So that kind of gives you a different flavor for, of course, they managed to raise more debt, but longer term, higher rates are not great for it.
No, yeah.